Welcome to another weekday series from Quest Trust Company. Today we have with us Arnie Abramson to talk about tax liens, and we are so excited to have him with us. But before we get into our topic, I wanted to play a new video that Quest has made about our new promotion this month in June about our toaster giveaway. So we're going to play a little quick video for you. We worked really hard on it, so I hope you enjoyed this video. Oh, we're working on the volume, guys. All right, guys, it looks like we're having a little trouble with the sound. We're going to try that one more time, I think. Just give us one little second.
Oh, God.
Oh, we're getting there. We're getting there. Third time's a charm. Give us 1 second, and we're going to have this video queued up for you. Trust me, it's going to be worth the wait. It's a very, very cute little video. There we go.
My goodness, another crazy day at the stock market. With all this uncertainty, how on earth am I going to feel comfortable retiring? There has to be a better way to invest my money safely.
There is.
Who said that?
The disembodied voice in your kitchen.
Oh my! Wait, what other way is there?
It's something called a self-directed IRA.
A self-directed IRA?
Yes.
Well, what does it do then, huh?
This IRA allows you to use your 401k and IRA money to invest in alternative assets, such as real estate, notes, and private entities. The stock market can be volatile, and having alternative investments that you are knowledgeable about in your IRA provides a lot less fluctuation and helps diversify your portfolio so you don't have all your eggs in one basket.
Well, that sounds like a swell idea. How do I get one of those?
All you have to do to get started is open up an IRA with Quest Trust Company. You can call one of our certified IRA specialists at 855-FUN-IRAs and submit an application online now.
How grand! I think I'll call them right now.
But wait, there's more.
There's more.
Don't get burned by the stock market this summer. When you open an account with Quest Trust Company, we'll send you a free toaster. That's right. When you open an account right now with Quest Trust Company, you will get a free toaster. Use promo code TOASTER, right, and call 855-FUN-IRAs and talk to a certified IRA specialist right now.
All right, guys, I hope you enjoyed that video as much as we did. That was Nathan Long, our president's voice in the background, and that was our very own Nicole Fana from marketing, starring in the video. And yes, we are giving away toasters again. This used to be something that banks did when you opened an account, and we are bringing it back this month for June. We have some more specials for you, so let me share my screen. I have just a few slides for you to share. There we go. All right. So welcome to our weekly webinar. Thank you so much for joining us. So for those who might not be as familiar with Quest, we wanted to just give you a little bit of information of who we are and what we do. So who is Quest Trust Company? We are an IRA custodial company out of Houston, Texas. We are the largest in the state of Texas, and we are started by two brothers, Nathan and Quincy Long. They were investors and are investors and built the company around the needs of themselves as clients. So we built our business around what can we do to serve you best. We have 20,000 active investors all across the country. So no matter where you're joining us right now, we can help you. $2 billion under administration, over 100 employees, and we have offices in Houston, Dallas, and Austin, Texas. Of course, our disclaimer, this webinar, as all of our webinars, are for educational purposes only. Quest does not give any legal, tax, structuring, or investment advice. Please make sure you're doing your due diligence before engaging in investments. Make sure you are seeking the advice of attorneys, CPAs, etc., before engaging in investments. All right, so what is a self-directed IRA and why do you need one? So self-directed is honestly just a marketing term, and it means you're in the driver's seat and you get to direct us on what you would like in your IRA. So here at Quest, we hold privately held assets, not publicly held investments. So not the stock market, where stocks, bonds, and mutual funds. Hence in our commercial, don't get burned by the stock market. So an IRA here is just like an IRA anywhere else. We just have a different platform allowing you to invest in these alternative assets. So some other benefits, diversification. So instead of just being able to invest in the market, you have now a platform to invest in these alternative assets. Tax savings. Several of our accounts have great tax savings. Our Roth account, of course, after meeting some specifications, you can qualify for tax and penalty-free distribution. So make sure you get in touch with our IRA specialist to see how we can do that for you. Social investing. Not everybody can qualify for a traditional mortgage, let's say. So doing so through an IRA, through seller financing, is a way that maybe you can help somebody in your community see a property in your own community improve and have that improve in your own community and actually see that benefit, something that you can't really get from the stock market there. And then of course, invest in what you know best. So this is really your time to shine. If you know a lot about oil and gas or real estate or promissory notes, private entities, etc. So lots of benefits there. So these are our 7 different types of accounts. I would love to tell you more about all of these, but unfortunately, I just don't have the time today. So please make sure and get in touch with your IRA specialist, and we would love to tell you more about all of them. Investment choices. Honestly, this is a short list. Oil and gas isn't listed on here, but these I would say are the 3 main asset classes that our clients choose from. Again, they do select their own investments, do their own due diligence, and then direct us how they want these in their account. So we have real estate here, private entities, promissory notes, and we have 3 different departments to serve all of those. Something that we really revamped that we wanted to tell everybody about is our new client portal. You can now do expenses on the portal, upload secure documents, submit your fair market value, see your secure messages, get your annual statements, your tax forms, and you can do all of your investments now online. So make sure you go to the client portal and check out the new features that we have there. We offer endless education. That's one great thing that we love about Quest, is this unique thing that Quest offers is all the free education. Of course, we're here now at the weekly webinar that we offer every Tuesday and Thursday at noon. Our YouTube channel is really amazing. Our marketing team does a great job of keeping that up. The webinar you're watching right now is actually being streamed live, and you can watch it there at any time under videos. All of our webinars are actually under our videos section there, and there's plenty of other videos there for more education on self-directed IRAs. Our own website has an education center that you should definitely check out. We have articles and videos, and then this event is really fun. I have to tell you about it. our virtual networking happy hour. This is the first and third Wednesday of every month at 6:30 Central. This is a place where you can come and find out more about investing, network with other investors, client or not client. You are welcome to come. Please join us. Very casual. Come have a glass of wine with us. See what it's all about. And of course, self-directed Saturday, every Saturday at noon Central, we have another guest speaker and topic for you. So make sure you're joining us for all of this. This summer, we are having a summer intensive. This is the first time we're doing this. We're really excited about it. These dates are all Fridays. It will be from 9 a.m. to noon. $25 does cover all 3 days. And we will be doing, this is a more high level workshop. So we'll really be diving deep into the topic. So make sure you check out this event. We also have a referral program. Every client that you refer and opens an account at Quest, you get $25 credited to your account and they get $25 off of their new account fee. So make sure you're referring your friends to Quest and tell them what a great experience that you're having. All right, this is the part that I've been waiting for. We have a special Father's Day promo for you. So now through Friday, so we don't have all that time left, but now through Friday, if you open one account, you get 50% off of your opening account fee, which is normally $100. So you can now open an account for $50 using the code Father's Day 21. If you open more than one account, we will waive all of the account opening fees on all the accounts you open using the code Father's Day Bundle. So make sure you get in touch with your IRA specialist to see what we can do for you. And of course, there's more. Don't get burned by the stock market this summer. When you open an account, you will get a free toaster with the promo code TOASTER. So make sure you get yours. And this is actually the exact one that you'll get. And does 2 slices and everything, lots of heat settings. So it's actually a very good toaster. All right, so how do you get in touch with an IRA specialist? We're very easy to get in touch with. This QR code actually does work. You can put your cell phone down. You can chat with us live on our website. You can go to questtrust.com. The chat box does pop up. This is manned by actual IRA specialists and our transactions team, not robots. So please chat with us. We'd love to help you. Of course, give us a call. I love our phone number, 855-FUN-IRAs. We really do make it fun to save for retirement. Or, of course, email us, IRAspecialist@questtrust.com, or you can email me directly at nicole.bago@questtrust.com. All right, I know that you are tired of probably hearing from me, and we are ready to talk to our guest and the man and the topic of the hour, Mr. Arnie Abramson and tax lien. So, without any further ado, please take it away, sir, and welcome. Thank you so much for being here.
Well, thank you. Let's see if I can share the screen. Can you all hear me okay?
We sure can. Thanks, Arnie.
Okay. Well, what we're going to talk about is tax deed sales. Now, I know your category says tax liens, and we'll cover the difference in a minute. And you know what? It's not just what you think it's going to be. So let's get going. First of all, what makes tax deed sales in Texas so special? Because it really is special. And here's why. Number one, the structure of tax sales in Texas is superior to all the other tax deed states. And the Texas real estate fundamentals are so good now. And you put those two things together and we have unique opportunities. Okay, now, what's so special about the structure? I'm glad you asked that. Okay. If a real property owner in Texas doesn't pay us property taxes, now a real property, that's underlined because a lot of people don't realize, most of you who are experienced investors, when you buy a house and there's a car in the driveway, you don't get the car. The car is not part of the real property. It's personal property. Well, what most people don't know is the same thing can be true at a tax sale if you buy a property with a mobile home on it. 99% of the mobile homes are personal property and not real property. Now, there are hoops they can jump through to turn their mobile homes into real property, but most do not. So you have to be very careful at the tax sales if you're bidding on a property that has a mobile home, you need to find out whether you're going to get it or not. All right. And then the county or any other taxing entity can file the lawsuit to collect the unpaid taxes. Now, the three main taxing entities are the county, the city, and the school district. There could be others. Could be a junior college. Could be in your area, and there are mud districts all over the place in Houston area, municipal utility districts. All of these are also taxing entities, but the three main ones are the city, the county, and the school district. And here's why that's important. You have to look and see which entity is suing for the taxes owed. Now, it could be all of them, or it could be just one of them. And so that's important because, the minimum bid, and we'll get into this in a little bit, the minimum bid, the opening bid on the tax deed in Texas is the amount of back taxes owed. But if the minimum bid only includes the back taxes from, let's say, the county and does not include the city or the school districts or any of the other taxing entities, that means after you buy it at whatever price you pay for it, you'll also have to, in addition to that, pay the back taxes on those entities that were not included in the sale. Most of them do include all of them, but that's something else that you must, check to make sure. And then a judgment is rendered, and the owner has the opportunity to pay the taxes. Now, why do I make a point of this? Because most of you are probably familiar with a mortgage or bank foreclosure. It's when somebody doesn't make their mortgage payment, they can foreclose right away, but not if someone is being foreclosed on for back taxes, because they have to jump through all these hoops. They can't just do it right away like a mortgage company can. They have to, number one, make sure that everyone with an equitable interest in the property is notified and given an opportunity to pay those back taxes before they schedule it for a sale. Now, I've got that in all caps because it's going to come back in a little bit in a different context. So remember this, everybody, before they can put it on the sale, everybody who has an interest in that property has to be notified. And then, if the taxes are not paid, the property is sold at the tax auction to the highest bidder. Now, tax deeds are sold in Texas. In states that are tax lien states, that means that you're buying the debt. Let's suppose we've got a property worth $100,000. Now, that used to be a good number. Now it's poverty, right? Under these circumstances. But for round numbers' sake, let's say we've got a property that's assessed at $100,000 and they owe $20,000 in taxes. That means in a tax lien state, what you're doing is you're bidding for that $20,000 lien. Now, tax lien states usually do it in one of two ways. They'll say, okay, there's $20,000, who will bid $10,000, opening bid for that? And somebody will say 10, somebody might say 12, 15, somebody may go over 20. Who knows? They'll bid it up based on that. In other tax lien states, what they'll say is the amount of interest we can pay on this is 14%. And then somebody will say in the bidding audience, I'll do it for 12%. Somebody else says, I'll do it for 10%. I'll do it for 8%. So they bid down the interest rate. In both of these cases, what they're buying is the lien. They're not buying the property. In a tax deed state, you're buying the property and you're buying it for the taxes owed. Now, that's a big difference. It's sort of like the difference between buying a bond and buying a stock. A bond is debt and a stock is equity. It's a similar type of relationship. Now, in Texas, the tax sales are foreclosure sales. The winning bidder is the new owner of the property right now when you buy it. The old owner has no rights, none, except one, the right to redeem the property. Now, what does redeem mean? It means a lot of different things in different contexts. The biblical concept is we're not going to even talk about. But in a tax lien state, It means that they pay off that lien that you bought with interest. They paid it off. That means they redeemed it. And they paid off the loan with the interest to the buyer who bought it at the auction. Okay, so you bought it for 12% at $20,000 and they paid it off. That's redemption. Now, in a tax deed state, redemption means something different. It means they buy back the property that we bought at the tax sale, and they have to pay us what we paid for it plus a penalty fee. And it's not prorated. In Texas, the penalty fee is 25%. If you buy a property for $40,000 and they want to redeem it, they have to pay you $50,000. That's the 25% increase. And that's only in the first year. Now, they're not prorated. See, in the tax lien states, there were interest rates. So if you bought a lien at 12% and they redeem it after 3 months, you only got 3%. It's 1% a month. But in Texas, if you buy it on Tuesday and they redeem it on Thursday, 2 days later, you get the full 25%. And that's the highest redemption penalty fee in the country. Now, that brings up the question, how long is the redemption period? It's 180 days. We call it 6 months, but technically it's 180 days unless it has a homestead exemption or an agricultural exemption, or it's a mineral lease that's been severed from the property. I understand you've been getting a lot of talk about oil and gas things with Quest 2, and they're showing up on the tax sales, these mineral leases now. So if it has any one of these exemptions, it's not 180 day, it is 2 years to redeem it. And if they redeem it in the second year, it's 50% because it's 25% per year. So that's sort of exciting. Now, in Texas, you get immediate possession and entitlement to the rent. I make a big point of this because Georgia is one of the states that is very much like Texas, except they pay a 20% redemption where ours is 25%. But in Georgia, they have another little funny thing. When you buy the property in Georgia at the tax sale, you get immediate ownership, but you have to wait a year and then apply for possession. In Texas, you get immediate possession and entitlement to the rent immediately. So that's another good thing for us. And when you buy the property at the tax sale in Texas, it wipes out the non-governmental liens. Now, the mortgage company. Is the mortgage company a government lien, a government entity? No, it's not. So watch what happens. It gets extinguished. I hope you're chuckling on that. It took me 20 minutes to figure out how to do that. Okay. And in Texas, we have an auction every month. Most states have them once a year, many states. I think Oklahoma and Mississippi, for example, once a year. In Texas, we have them every month. And it's always on the first Tuesday of the month, with 2 exceptions. If a national holiday falls on the first Tuesday of the month, they will have it the next day. Now, there are only 2 national holidays that could fall on a Tuesday, and if we were going back and forth with communication, I would ask you who can come up with it, what those 2 holidays are. But I'll give it to you. It's the 4th of July and New Year's Day. Those are the only national holidays that could fall on a Tuesday. And it used to be, they just wouldn't have a sale that day. But they changed the law a couple of years ago, and now they'll have it on the first Wednesday in those 2 cases. And it happened that way in 2019 when January 1st was on a Tuesday. Some of the auctions are now going online. Most of them are still at the courthouse, and some of them are somewhere else because the courthouse is being renovated or there's too many people and they'll have something else. In Harris County, where Quest is headquartered, for years and years, they've had it moved not at the courthouse, but out to various places because they have several hundred people who go to those things. And usually they're between 40 90 counties that are having a sale on the first Tuesday every month, between 1,000 and 2,000 properties for sale. That's a lot. Now, the second thing is the real estate fundamentals in Texas. Look, what are the fundamentals? The biggest ratio is the supply and the demand. Well, what's the supply and demand situation in Texas now? I think that's it right there. There's a tremendous demand for the housing. The demand, there are more and more new people coming to Texas every day. The cost of living is lower in many states. A lot of California people are coming to Texas for that reason. The foreclosures, they're going to accelerate now because of June 30th, all those things that were postponed are coming out. And no individual state income tax in Texas. That's a big attraction. The weather is better than most. Sure, we get hot days, we get winter storm like we had this year, but generally speaking, it's a lot better than a lot of states north of us, and very good employment opportunities. In addition to that, new businesses are welcome. They're welcome here and they look forward to it. And we have a friendly environment. As all the people at Quest will tell you, that's why they have 3 offices in Texas. And there's plenty of land. And that's important right now for a lot of reasons. And it has to do with supply, because there's no more affordable housing in the big cities in Texas. Dallas, Houston, Austin, San Antonio, Fort Worth. No more affordable housing. What is affordable housing? I remember it was 70, 80,000, 100,000. Now it's somewhere, what, 270,000 is the median house price? Oh my gosh, that's crazy. And there's a shortage of housing all over the state. The demand exceeds it so much, it's incredible. And on top of that, the material, the building costs. Look, plywood, the wood for building homes doubled twice in a 6-month period, their pricing this year. So it's a major housing shortage all over Texas with an increasing demand. That's good real estate fundamentals for us as investors. Now, the tax sale auction prices have been soaring up just like they have in every other section of the real estate economy. So it's not like the old days. You could go to the tax sale in Texas and buy a property at 30 or 40% of its assessed value. No, it's a lot more competitive now. But there are ways to work with that. Now, what about the elephant in the room? The COVID-19. What has that done? Let me tell you what it's done. It has accelerated the demand for housing in Texas and reduced the supply even more. We have people who were living in the cities that want to move to more rural areas, like this behind me. Yeah, I wish I could say that's my backyard. Maybe I'll say it's like my backyard. But people are moving out because they want more room, a lot of different reasons, and second homes, and people are building homes. So it's just accelerated everything about it. So what do you think is going to happen in the future? That's the question, right? Do you think prices are going to stay about where they are now? Or maybe they'll come back to normal, what we used to think was normal. Or will they continue to go up? Good questions, huh? Well, the consensus, when I've taken the polls, are, guess what? They think they're going to keep going up. In addition, do you think there's an outside chance that we may be in for just a little bit of something that, in the old days, they used to call it, what was it? Oh yeah, inflation. I mean, let's think about it. It used to be they talked about in Washington, D.C. about spending millions. Then they talked about billions. Then they talk about trillions. And now they're even talking quadrillions. How do you wrap your mind around what that means? But when they keep printing money like that, there's a catch up coming. You got to catch up somewhere. And we call it inflation. In one period of time, it's called stagflation. All kinds of inflations. But it all means prices going up. So that's something, let's keep. In fact, I read an article this morning that said inflation is already here. It's already exceeded the percentage amount of inflation over year to year that they consider healthy. So what's going to happen? So we've touched on the Texas tax sale structure. We've touched on the real estate fundamentals. What makes unique opportunities with these? Well, one is fairly obvious. If you buy the properties at the auction at a discount, it's great. You get incredible demand and very meager supply. So that's great if you can buy these properties at the tax sale auctions. And they have them every month. Remember, you can buy them at a discount. You get immediate possession, entitlement to the rent right away, highest redemption penalty fees in the country, wipes out the non-governmental liens, and the great fundamentals are here. Plus, we have a landlord-favored environment. Now, that's great. That's the obvious one. That's the one that's why at the opening little slide, I said, not just what you think, because this is what you expected me to say, probably. Hey, go out and buy these sales, and you can do that. But there's another opportunity that I think is really unique. And you know what? I heard a while ago, I heard it mentioned in the little intro. It's lending to investors who buy real estate at the tax sales in Texas. Now, I talked about it. I think you called it social investing. And that's exactly right. Because look, what makes it so unique in this? Well, they can't get it anywhere else. They cannot get loans on properties bought at the tax sale anywhere else. Banks will not loan money on tax sale properties for a period of time. Neither will mortgage lenders, and guess what? Even hard money lenders, no, will not. Why not? Because there's no title insurance on properties bought at the tax sale for at least 2 years. Some of the properties, some of the title companies want 4 years and 5 years. Now, no title policy. Most investors think that's because of that redemption period. That's 2 years is what they talk about. That's not the case. Here's what it's really about. Remember, I said at the opening, I had all that stuff in capitals, in all caps. Everyone with an equitable interest in the property is to be notified and given an opportunity to pay the taxes. Well, there's a challenge there. There's a 2-year period. It happens to be 2 years, and that's why people associate it with the 2-year redemption period. It happens to be for 2 years if someone who is entitled to be notified of the property and given a chance to pay, if they can prove that they were not notified, they can contest the sale, and if they win, it undoes the sale. That's what it's all about. Now, title companies hang their hats on that, although it almost never happens. But that's the reason. And now, why is it important? Why do you need a title policy? Well, if you want to sell a property, aren't most of your buyers going to require title insurance? Probably, unless they're tax sale buyers that know that I'm going to hold it and rent it out and I don't need it for a couple of years. Or if you want financing, lenders are going to require it. I have not found one lender yet that does not require a title policy. And I've been looking for 15 years or more. You, as the lender, would have no competition from the banks, from the mortgage companies, from the other lenders. No title policy is the reason most of investors buy the properties to hold it for at least 2 years. Obviously, they want to have cash flow coming in, not going out for taxes, insurance, and things. So they're going to buy it for the cash flow to be generated by renting the properties out. Now, what are the rents like in Texas? They're outstanding. People are moving to Texas. Rising affordability is forcing more people who can no longer afford to buy a property to rent. And there are buyers that are renting because they go buy a house and they say, well, we'll have it ready for you in 6 months or more because we got to go build it. And there's a shortage of materials and the cost is higher and going up. So we've got rents all over the place. So it's much easier to get good cash flow from these rentals of the properties that we're buying at the tax sales. Now, that creates a real problem for investors going to the tax sales, because if they buy the house, the property, based on the cash flow that they want to get by renting out the properties, and the demand for the housing is raising up the prices so much at the auctions that if they buy it and they bid more than they used to bid, now their returns are going to be lower. Or they'll just get outbid. And that's happening everywhere. Well, what's the solution? The solution is if they can get financing to provide leverage for them. What is leverage? That's where you're loaning them the money. It's a win-win opportunity for them and for you as the lender, because for them, it gives them the leverage that enables more competitive bidding. What does that mean? That means, okay, before I couldn't bid over 120,000 to get this property because I want a 10 or 12% return. Now, if I go over that, my return is much lower. Well, not necessarily if they have leverage. Now, maybe they can bid more on it and still get a better return or a good return. It also frees up capital so they can go do rehab or they can buy another property. And it eliminates that long waiting period for the loans or the sales in 2 years and 5 years and whatever it may be. Not only that, they'll find that even if they do buy the property at the same price, now they can get a higher return using the leverage if they know how to do that right and structure it. So it's a great advantage for them. And for you, you have no competition from normal lending sources. What does that mean? That means you can negotiate the interest rate. You could even put in an equity kicker and you can negotiate it however you want to do it. And the borrowers are generally people that have bought it already for cash and now they need a refi, a cash out refi. So they got the money. They just need the leverage to make it work. And it can be well collateralized, well in advance, because you're making all the rules. It's really a very interesting situation. So I'm not sure, but after throwing all this out at you, does anyone have any questions about any of this?
Hey, Arnie, thank you so much for your presentation. That was amazing. I took a bunch of notes myself. We actually do have questions.
Well, great. I was hoping so. I have to warn you, there are not very many short answers in this arena. Okay.
That's perfect. That's perfect. All right. Our first question is from Dora. Let's see. Oh, I'm sorry. It is from Jennifer. Where or how does one connect with an ethical tax deed buyer/landlord?
I'm not sure I understand the question. You mean?
I guess like an ethical person to maybe purchase the tax deed, I'm guessing is kind of the question.
Is she clarifying it?
No.
I'm not sure if she's asking where do you find the houses that are up there, or why would you want a landlord? I mean, you want. Oh, I see. She's asking where would you,
how does a lender
find the buyers
to work with?
I'm sorry. Say it again.
She rephrased it. How does a lender find a good person to work with?
Ah, okay. Well, we have a number of investors that come to us, and we're a service company, so we could get in touch with me. I can give you lists, or I can put you in touch with them if you like.
Yeah, will you put your information in the chat box?
I have it right up right there. Can you, on the screen?
My chat box was blocking the top of the screen. I apologize for that.
Oh, okay.
Perfect. So it's already up there. Okay, the next question we have, if you get a house on a tax sale, is the mortgage wiped out?
Great question. Yes. Yes.
Okay.
Because the mortgage is not a government lien. So it is wiped out. Now, as I said, there are no short answers. So let me explain a little bit.
Please.
Very few of the properties that have mortgages get to the tax sale. And here's why. Most people who have a mortgage on a house escrow their taxes to be paid by the mortgage company, right? So the only way they would be deficient on their taxes is if they were deficient paying their mortgage company. And the mortgage company, once you stop making payments to them, they can foreclose a lot quicker than the tax people can, because they have to go through all that rigmarole of notifying everyone. So people who escrow their taxes, if they are deficient, then they will find those properties at the mortgage company sales, not the tax sales. Now, there are some that will slip through. There are some people who don't have mortgages. There's some people who, maybe it's an investor who's doing an owner finance and the investor didn't do it, and, didn't pay the taxes. Or maybe it's some people decide they don't want the mortgage company to escrow their taxes. I know a lot of people say, no, I'm not going to let them hold my money. I'll take care of it. And then something comes up and they don't pay their taxes. And also, and I hate to mention this, but it is true, some mortgage companies are so big and so tangled, the right hand doesn't know what the left hand's doing and they slip through the cracks. Bottom line, when we're looking for properties to bid on, if it's got a mortgage on it and it has slipped through, we really want to bid on that one, because the mortgage company 99 times out of 100 will redeem it. And you get your 25% back real quick.
Perfect. Thanks so much. Okay, this one's kind of specific, but we're going to go for it anyway. So this person bought a property at a sheriff's sale 6 months ago. The old owner had homestead 2017, but lost it in 2018 because appraisal office removed it because they were no longer living there. When can we sell the house?
Okay, when did you buy it? What year?
It looks 6 months ago. It looks like they bought the property 6 months ago.
Okay, here, that's sort of a gray area, but when it was listed at the sheriff's sale, was it listed with a homestead exemption or not? That's really what it's all about. Probably. Now, there are exceptions, and you might have to, I would suggest you start off with calling the appraisal district and ask them, but actually, you know what, more I'm thinking about it, if you want to sell it, get with your title company.
Yeah.
Yeah.
All right, perfect. Well, we still have time. So if you're still good with questions, you're still good?
Well, excuse me a second.
Yep.
Remember though, the selling the property has nothing to do with the redemption period. Remember, we just covered that. It's when you can get a title policy. And so it doesn't matter whether it's a homestead or not from that point of view. So, I kind of took the wrong approach on that.
So that's kind of the trick then, is that getting it.
If you bought it 6 months ago. Now, having said that, there are certain ways you can get a title policy after 6 months if it is not a homestead, even though I said it has nothing to do with it. But that's a little more complicated. And get with me afterwards and I can go through it with you.
Perfect. All right, here we go. If the house is not a homestead and has a 180-day redemption, does the 2-year title issue still apply?
Yeah, the title issue has nothing to do with the redemption. See, everybody feels like it. Most of us think it does because of the 2 years and 2 years. It really is the title companies are saying, as long as they have 2 years in which to contest the sale, if they weren't notified, we're not going to do a title policy. That's what it's all about.
Okay.
So, now, again, as I said, there are always sometimes things you can do, but
All right.
generally,
Okay. Scott asked, is there a place to find out about tax deed sales in Texas all in one place, or do I need to contact each county individually?
again, feel free to contact me.
Okay.
Yeah.
All right.
Yeah.
Perfect.
Actually, I think I can say this, but we have a list of all of them. the
Okay.
whole state, so we can do that.
Perfect. Well, looks like you can contact Arnie for a list of those. That was from Scott. So Scott, it looks like you can reach out to Arnie with this information right here for that one. All right, here we go from Diego. If there is a property in which taxes have not been paid for years and is for someone that died, does it have to go to auction, or can I go to the county and pay the taxes and take ownership?
Great question, Diego. The answer is it depends. But if someone dies, was it probated? You know, who owns it now? Because if you go pay the taxes, all you're doing is you're giving away the money. That doesn't give you ownership.
Mm-hmm.
You know, you have to have someone deed it to you to get ownership. That's I don't want to give legal advice, but you know, that's sort of the way it works. We run into that quite a bit, where people will call us who got their properties listed on the tax sale, and they say, "Hey, can you help me, because my aunt died and left it to me, but it was no probate, and so I don't know what to do." And they can't sell it because they're legally, it's not in their name. They can't borrow the money because again, it's not in their name. So it's a tough situation. And usually they will go to the tax sales because there's no one else that can do anything with it. Now, every now and then we can sometimes advise them and give them some pointers, and sometimes you can work with them, but that's the problem.
Mm-hmm.
Hope that answered your question. Yeah.
I think it was a great answer. It is kind of one of those kind of the gray areas.
Yeah. Who's the owner? You know, just because they inherited it or they're living there, if it's not in their name, they're not the owner, according to the appraisal district, to the taxing people.
Mm-hmm. Okay. If an owning party proves they were not notified, doesn't that proof now nullify the tax sale, thereby triggering a total loss for the lender?
Okay, if someone comes and proves that they were not notified, and it's very difficult to do that, because how do you prove a negative? You know, number one, but you can prove it, and I have seen it happen, but that doesn't make a loss. They just undo the sale. They give the money back to the buyer if they prevail.
Yeah. All right. What is the eviction waiting period post-sale if it is a homestead?
Well, once you buy it at the tax sale, you are the owner immediately. Okay. Now, you should honor any leases that are in there to the end of them, but most of them you could find on the sale, the leases are not in effect, but you should honor that. But if it's not a lease, if it's the owner, you can say, look, we teach our people, we say, look, when you buy a property at the tax sale and you go knock on the door and say, we just bought your house, then the 9 most important words that they want to hear: don't worry, we don't want you to move. And we will say, you can stay, but you'll have to pay us rent. And if they don't, you can evict them. And the short answer to your question about evictions is you have to wait 20 days and then you can evict.
Okay. All right. Next, we have, if a property for sale is due to delinquent school tax only, and the county, it looks like and the county and city taxes are not delinquent, do you receive ownership and possession if you are the winning bidder at the tax sale?
My understanding is yes. If it gets to the tax sale, you bought it. End of story.
Okay. Well, pretty good answer. Pretty easy answer there. Here is a different sort of question. What happens if a deed is not bid on at auction?
Well, that's called strike off. That means it's struck off of the list. And here's what that means. It means it's struck off to the entity or the entities that initiated the suit. Let's suppose it was the school district, that they were the only ones. That means, well, let's say that they all three of them. That means that nobody bid on it. So now it is purchased by those three taxing entities for the taxes owed. They are the new owners. Here's why that's important. That starts the clock. On the 2 years, on the 6 months, on everything, it starts the clock. Now, what happens to it? There are at least 3 different ways that these taxing entities can deal with it. Some of them will say, make us an offer and we'll consider it. Some of them will say, we're going to have another sale of just struck off properties down the road. We'll notify you. Give us your name and address. Another one will say, we're going to have a sealed bid and you'll have to send in X dollars as and we'll let you know how you do and that kind of stuff. They all handle them differently. So that's why if you're at the tax sale and no one bids on it and they say it's struck off, listen to what they say. To whom is it struck? They'll say struck off to the county, struck off to the city, struck off to the school district. Listen for that, because that's who you can contact and go say, okay, how do I do it?
Mm-hmm. Like, what are the terms, etc. Perfect. Okay. We have time for a few more questions, guys. How do you get a loan to build on land purchased on tax sales and past the 2-year redemption period? This might be more of a loan question.
Well, yeah, that's really a loan question.
Mm-hmm.
Now, during that 2-year, not redemption period necessarily, because there would only be 6 months on just land, but on the 2-year period that you cannot get a title policy, that's why I'm telling you guys, you're in the perfect position to lend people. Now, the first question we got was, where do you find somebody? There's somebody right now. So you two need to get together.
Yeah.
But it's really, I guess, to answer your question, after 6 months, after the 2-year period, then you can go to any lender that would normally do that.
Mm-hmm. That makes sense. Can you go to a former owner and get clear title from them in under 2 years?
You know, that's a great question. It's not title you want. What you really are asking is, can you buy his right of redemption? Because he doesn't own it anymore. He can't give you title. He can redeem it. Now, our legislature, in its infinite wisdom this year, passed a law that said you may not sell your right of redemption. And if you do, it is not valid.
Okay.
Now, what you could do is say, look, I mean, there are ways that you could probably do it. You could say, you go redeem it, find somebody else or something to loan you the money, then I'll buy it from you. But good question.
Yeah, very. All right, we're going to do one last question, and then that's going to be it, guys. I know there's a lot of questions that did not get answered, but we have Arnie's information here up on the screen for you to reach out to him and get a lot of these very specific tax questions answered for you. But we're going to have one more question, guys. If a sale is nullified, do you get compensated for the improvements? Do you get interest after the auction?
Well, I think what you're really asking is if they redeem it, what about the money you spent on? Is that the question?
It reads specifically, if sale is nullified, do you get compensated for improvements? Do you get interest for period after auction?
That's if they nullified. I'm not sure. That's probably something to be negotiated. But the real question is, if they redeem it, what about the money you put in for improvements, right?
Mm-hmm.
During the period you owned it, because that comes up more often. The question you're asking, very seldom does it ever come up, because most of them, don't get redeemed anyway. But the answer to that is, and it's very specific in the tax code, they have to pay you what you paid for it at the auction plus 25%, plus anything that falls into the category, and here are the magic words, that maintain, preserve, or safekeep the property. Those three words are in the tax code. Maintain, preserve, and safekeep the property. For example, and the example they give you in the tax code, it says, for example, if you're going to make insurance premiums against the house burning down, those premiums are certainly to maintain, preserve, and safekeep the property. So you would get that back also plus 25%. But what you do not get back is upgrades, because that doesn't fall into maintain, preserve, and save. For example, you've got countertops from mica and you put granite. You're not going to get very far trying to get that back plus 25%.
Right.
So, by the way, if I can throw one thing in,
please.
We're having we're launching our new website, and hopefully it'll be tonight or tomorrow. I'll be on there, but it'll be the same as in my email, and it's txtaxsales.com. Right now, if you click on that, an hour ago it said something cool is coming. So
I'll put that in the chat box.
Right, but I'm certainly available for any other questions and stuff. And I love questions. I really do. There are no dumb questions, just dumb answers. Okay.
I love the question and answer part too of these webinars. You really, it opens it up so much, and you can really see people's brains working and how creative investments can get and whatnot. So thank you so much, Arnie, for being here with us. It was amazing information. I learned a lot today. I hope everybody that is watching learned a lot as well. Arnie's information is up there to please reach out to him for the tax lien and the tax deed questions that are so specific. Please feel free to reach out to Quest Trust for any IRA self-directed questions. We are very happy to help you. Thank you so much, everybody, for joining us today. And we will see you again at our next webinar event for Quest Trust Company. Have a wonderful afternoon, everybody. Bye.